MFRS 134. MFRS 134 is an accounting standard that provides guidance on the preparation and presentation of interim financial reports. Interim financial reports are financial statements prepared for a period shorter than a full financial year, such as quarterly or half-yearly report. The main objective of MFRS 134 is to ensure that companies provide timely, relevant, and reliable financial information to users, including investors, creditors, and other stakeholders. By receiving financial information more frequently, users can better assess a company's financial performance, cash flows, liquidity, and overall financial position through the year, rather than waiting for the annual report. Under MFRS 134, companies have the option to present either a complete set of financial statements or condensed financial statements. Condensed financial statements provide a summary of key financial information while still maintaining the quality and usefulness of the report. In addition, MFRS 134 requires companies to disclose significant events and transactions that occurs after the latest annual reporting date. This helps users understand any important changes that may affect the company's financial condition and performance during the interim period. In conclusion, MFRS 134 plays an important role in enhancing transparency and supporting informed decision making by providing up-to-date financial information to stakeholders.
There are two significant transactions that affect Gamuda Berhad financial position and performance since the end of the last annual reporting period. The first one is acquisition of 336 acre land at Gamuda Corp for 248.7 million in the fourth quarter on 1 May until 31 July 2025. The purchase of land increased Gamuda Berhad asset or property development asset in the statement of financial position. The acquisition expanded Gamuda Land Bank and strengthened its long-term business growth and investment position. However, the purchase reduced the company's cash position due to the cash outflow used for the acquisition. The investment is expected to contribute future revenue and profitability through a projected gross development value of 2.2 billion. The second significant event is dividend payment of 5 cents per ordinary share for 2 interim dividends. Dividend payment are distribution of profit to shareholders. This transaction reduced Gamuda's retained earnings and cash balance. Since retained earnings are part of the shareholders' equity, the dividend payments also decrease the company's total equity after distributions. In addition, the reduction in cash balance may affect the company's liquidity position because cash resources decrease after the payment is made to shareholders. Under MFRS 134 interim financial reporting, dividend distribution must be disclosed in the interim financial report because they significantly affects the company's financial position and liquidity. In conclusion, both the land acquisition and dividends payment had important impacts on Gamuda Berhad's financial position, cash flow, and future business performance.
For this topic, we have selected Gamuda Berhad, which is analyzing its fourth quarter interim reporting for 2025 together with the comparative period for 2024. The term consolidated means that the financial statements combine the financial information of the parent company and all its subsidiaries into a single report. This provides a complete picture of the group's overall financial performance and position rather than showing each company separately. The table shows the reporting periods used for each consolidated financial statement. The consolidated income statement, statement of comprehensive income, and cash flow statement cover the 3 months ended 31st July 2025 compared with the 3 months ended 31st July 2024. Meanwhile, the statement of financial position reports the company's financial position as at 31st July 2025 compared with 31st July 2024. The statement of changes in equity covers the 12 months ended 31st July 2025 compared with the same period in 2024. Conclusion, interim financial reporting helps stakeholders evaluate the company's performance and financial position by comparing current results with the previous year's corresponding period.
MFRS 8 is the Malaysian Accounting Standard on Operating Segment issued by the Malaysian Accounting Standard Board or MASB. MFRS 8 is applied by listed companies in Malaysia when preparing their financial statement. Under this standard, companies must disclose information about different parts of their business operation, also known as operating. An operating segment is a part of a company that carries out business activities and earn revenue while also incurring expenses. For example, a company may have different segments such as retail, manufacturing, or services. purposes. The main objective of FAR570 is to help user of financial statement to better understand the company performance. It allows investor, shareholder, and stakeholder to evaluate the financial performance, risks, opportunities, and business activities of each segment. MFRS 8 uses what is called the management approach. This means that the business segment reports are reviewed by the Chief Operating Decision Maker or CODM. The CODM uses the information to make decisions about resource allocation and to assess the performance. MFRS 8, companies are required to disclose important information such as segment revenue, profit or loss, asset, liability, and the basis used to measure the segment. Conclusion, MFRS 8 improve transparency in financial reporting and help investor and stakeholder make better business and investment decisions. Based on MFRS 8, the CODM identify business function in the entity. CODM is not based on specific job title. The responsibility of CODM is first, to allocate resources, and second, to assess operating segment performance. CODM can be a Chief Executive Officer, CEO, or Chief Operating Officer, COO, or Executive Director or Executive Board. The company that we selected is Gamuda Berhad, which is a public listed company on Bursa Malaysia. In applying MFRS 8 on operating segment, the Chief Operating Decision Maker or CODM of the Yang Berbahagia Datuk Lim Yun Ling, who is the Group Managing Director, and Mr. Su Kok Wong, who is the Group Chief Financial Officer. According to MFRS 8, the CODM is responsible for identifying the business operation and revenue of the company. They also evaluate the performance of the operating segment and allocate resources across the business segment. In Gamuda Berhad, the director play an important role in overseeing the company's strategic direction. They assess business performance by considering revenues and expenses from each operating segment before making decisions on resource allocation. For example, Yang Berbahagia Datuk Lim Yun Ling stated that the strategies implemented by the Gamuda Group have resulted in continuous growth in revenue and earning across its core businesses. This shows that the CODM monitors and evaluates the company performance. Besides that, the Group Chief Financial Officer, Mr. Su Kok Wong, also mentioned that the company operating segment achieved excellent income and revenue despite facing various operating challenges. This demonstrates that the CODM effectively managed the company resources and performance in line with the requirement of MFRS 8. Moving on to the segment information of Gamuda Berhad, the company has identified two reportable segments under MFRS 8. These are engineering and construction and property development and club operation. The engineering and construction segment includes projects such as highway, bridges, railway, tunnel, dams, and water treatment plant. Meanwhile, the property development and club operation segment focuses on residential and commercial property development as well as club operation. These segments are reported separately because they involve different products, services, expertise, and business strategy. According to MFRS 8, this information must be provided to the Chief Operating Decision Maker or CODM for decision-making purposes. For Gamuda Berhad, the CODM review the operating result of each segment separately rather than looking only at the overall company performance. This allows the CODM to assess which segment is generating higher profit, which segment is facing challenges, and how each segment contribute to the Gamuda Group overall performance. For example, if the engineering and construction segment records stronger operating profit, the CODM may decide to allocate more resources or investment to support future projects in that segment. Similarly, if the property development and club operation segment shows lower performance, the CODM can investigate the reason and take corrective action. As stated in the annual report, the CODM evaluates segment performance based on operating profit or loss. Therefore, the segment information disclosed by Gamuda Berhad is important because it provides the CODM with the information needed to assess performance and allocate resources effectively, which is fully in line with the requirement of MFRS 8. In conclusion, Gamuda Berhad has applied MFRS 8 effectively by identifying its operating segment and reporting their performance separately. The CODM uses this segment information to evaluate the operating result, allocate resources, and make strategic decisions. By reviewing the engineering and construction segment and the property development and club operation segment separately, the CODM can ensure better performance assessment and support the company's long-term growth and success.
Now let's talk about aggregation criteria at MFRS 8. There's two criteria, which is first, segment have similar long-term financial performance. Second, segment have similar economic characteristics and the segments are similar in each of the following respects. A. The nature of the product and services. B. The nature of the product processes. C. C. The type of class of customer for their product and services. D. The method used to distribute their product or provide their services. And E. If applicable, the nature of the regulatory environment, for example, banking, insurance, or public utilities. Gamuda Berhad are using business segment report, which is engineering and construction, property development, and geographical segment reporting, which is Malaysia and overseas, such as Vietnam and Singapore. Next, I want to talk about key benefits of segmental reporting for financial statement users. The first one is competitive and operating risks associated with each operating segment. Assessing similarity and differences can consider how wide or narrow the reporting breadth of business activity. Two or more operating segments considered to have similar long-term performance should be impacted similarly by events that have significant economic consequences. In Gamuda Berhad's 2025 annual report, the company separately report major segments such as engineering and construction, property development, and expressway. This allows investors and stakeholders to clearly identify which segment contribute the most revenue and profit, making it easier to evaluate the company performance and future prospects. Second benefit, to help users understand risk and economic environment. Operating segment with similar economic characteristics often exhibit similar long-term financial performance. Future financial performance of the startup businesses is expected to be similar to that of a reporting entity. For example, Gamuda Engineering and Construction project may have depend on government infrastructure spending, while property development performance may be influenced by housing demand and interest rate. Therefore, stakeholders can better understand external factors for each sector.